gamings, whatever, Web 2.5 gamings or fully on-chain gamings. Yeah, that's about us, yeah.
Thanks, Ray. Raghav?
Yes. Hello, everyone. Raghav this side. I'm part of the investment and research team at LongHash Ventures. Quick intro about LongHash. LongHash is a Singapore-based Web3 VC and accelerator. We started off in late 2017, 2018, primarily as an accelerator. The idea was to partner with ecosystem and help incubate early stage projects. So, for example, we started with, we partnered with Polkadot, incubated projects like Akala and A-Star in the Polkadot ecosystem. Hey.
Sorry, guys.
So, you know how lucky we are. We even have Shaishav from Lemniscap joining us now.
Hey guys, got delayed with checkout, but apologies.
Yeah, I think Shaishav had a FOMO that the rest were speaking. So yeah, great to have you here. So as I was saying, we started off as an accelerator, working with foundations and infrastructure projects to incubate early stage projects. We have done like 13 or 14 cohorts, and the idea is to incubate early stage projects. Did that with Polkadot, incubated Akala and A-Star. We've done a lot of work in the Filecoin ecosystems. We have done 4 cohorts with Filecoin to incubate different applications and use cases on top of Filecoin. So for example, Huddle 01, which is a decentralized Zoom running on IPFS, or perpetual storage on top of IPFS, so those kind of things. And then early 2021, we launched our first fund that was mostly focused on the application and the consumer side, backed projects like Balancer, CowSwap, InstaDapp, Dodo Finance. We launched a second fund in 22 that was more focused on the multi-chain thesis and a little bit more skewed towards the infra side, backed projects like zkSync, Safe, scaling solutions like Kakarot, have heavily invested in the AI sector as well. We have looked in, invested into restaking, so a wide variety of projects. And then we've been very, deep in the Cosmos ecosystem as well. We have backed projects like Neutron, Saga, Union, Composable Finance, Milky Way. So yeah, Cosmos has also been a focus for us. And yeah, in terms of value add, we typically, love to bootstrap the ecosystem. That's what I would say our specialization is. So for example, we invested in Neutron, and in partnership with Atom Accelerator, we incubated 5 DeFi applications on top of Neutron. So along with the investment, the projects are keen to work with us because they would get, support in their ecosystem bootstrapping. We work very heavily on the tokenomics and governance side. So for example, LongHash team wrote the V Balancer tokenomics model, which was then passed to the community forum. We are one of the Safe node guardians, and we contribute to the Safe Constitution DAO. So yeah, along with your typical portfolio ad, I would say these are some of the key areas that we tend to work our portfolio companies with. And so yeah, typical check size. Yeah. So our with our current fund, we are deploying at the moment. Typical check size is usually roughly around $1 million. And yeah, happy to chat with anyone who's interested in having a conversation.
Thank you very much, Raghav. Shaishav, do you want to introduce yourself?
Hi, I'll keep it quick. I'm a general partner at Lemniscap. We are early stage fund, but segment agnostic. We are among the few funds who also do equity. We also deploy in Bitcoin. I think we've deployed in Lightning, so very segment agnostic as such. Right now, I'm very interested in JK and consumer applications. I think the big case or the big outlier would be a consumer application, and we are very interested in investing, and I don't see too many good teams building. There's too much infra, too little applications. On our check sizes, we generally are lead or co-lead firm. 90% of our current portfolio on our current firm is leads or co-leads. We have co-led deals in the recent last 6 months with A16Z, Variant, and everyone. We are very good at coming early, working with founders, being in the lead role, taking them to Series A, Series B, very confident with that. We don't care about which other funds are in your investing. That's not our question. And yeah, would love to hear what you guys are building or everything.
Thank you very much, Shaishav. So this introduction was pretty dense, I know, but I think it's useful for you to know more also the story of the funds and what exactly they're doing and looking for and the value they could provide. So maybe let's go directly into market section. So the last 10 months were extremely hectic, volatile on the market. So we had these ETF approvals, we have like liquidity coming on, we have difficulties in macro. Maybe can you, in just one word, describe current market conditions?
I'll take maybe 2 or 3 words. I would say we are optimistically still in the trenches because if we are banking on ETFs to get exposure to Ethereum, I would say we need to work a little bit more. So I would say I'm still optimistic, but yeah, the market is still in kind of trenches. So yeah, that's how I would describe the current conditions.
I think the markets are great. I prefer markets like this than a very hot market. So for me, this validates my expectation of a bull run next year. If we didn't have this correction, I would be worried, to be honest.
Okay.
For me, this is great.
Ray, do you have any take?
Maybe one sentence is we think is in the some level of middle of the bull markets, but I think it's quite better than the last year. I think we witnessed a lot of quite a few founders from our portfolio and even other founders were super struggling to finish fundraising in the last year. And a classic example is that in September, before October, back then the market is still very bad, and some of our founders only have 3 to 5 runway, and they are super struggling to finish the fundraising. And some of them even still try to squeeze the budget for marketing to purchase expensive tickets on token event in Singapore for the sake of fundraising. I think it's compared to that period of time, right now it's much better for founder. But I would say for investor have a lot of questions about why still not we can see a very interesting use case, very disrupted innovation, etc. But I think in general it's okay. Yeah.
Yeah. So maybe what's your your industry, like the state, but so these were the market conditions, evaluations on the liquid side, but what's your take on regulation, evolution of the technology, adoption, like global state of the industry as of now? It's a pretty open question, I know.
I think we are maturing well. I think regulations have, for some of us who have been in this space for a while, it's only in the last 3 years that regulations have come in the space as such. So regulations have actually picked up. We're reaching maturity. We have ETFs launches and stuff. And I don't see this rolling back as such, right? So we're already on the path of regulating this as an industry as such. In terms of maturity in the industry, I think we have, again, moving a lot ahead. The kind of analysis you see in the deals and stuff is great. And the kind of investors who are coming are much more sophisticated, and that's good for the industry. My only complaint is that crypto is still, everything pumps together, everything dumps together. Until that does not change, till we cannot differentiate between asset qualities and different assets, it's still a market where everything is just narrative as such.
So that's a perfect point. So yeah, the volatility on the liquid side is extremely high, but our job is to invest early, so seed, pre-seed, before it reaches like a token reaches the market, before mainnet. So how, as early stage investor, do you manage like the liquidity that comes early and like a possible bull run, the increase on the liquid token side? So how do you change the way you deploy capital, if you change it in the last 10 months, considering this news about regulation, more liquidity in the market? Did you start to have, for instance, a liquid part in the portfolio? Did you start to maybe invest in projects where you have shorter cliff investing periods? Are you looking at technology which could have more adoption? Do you take less risk, like less maybe game changer projects, but also less risky projects? How did you have this market condition change the way you deploy capital?
Yeah, so I personally feel that some of the best bets we have made so far have been when we were in the proper bear market, Because when you're talking about early stage investing, specifically, pre-seed or when you're just starting out, I think the market conditions won't impact you that much in terms of the product building. Of course, the market sentiment will decide how much you're able to raise. But I think during the bear market, you're very well able to focus on the product side, on the technology side, on the users, rather than simply focusing on token. I think founders or anyone in the ecosystem should not think of token as yet another product that they need to manage. The focus should simply be on the problem that they're solving in the users and how can they, enable the users. And the token utility has to be, tied to that. And that comes slightly later, not maybe, during the super early stages. In terms of if the strategy changes in terms of deployment, of course, to a certain degree, it influences how the markets are. But as I said, we deployed quite aggressively during the bear market because that's when we felt, the founders were a lot more motivated to, prove that, we can build something that's actually useful and in the longer run will have utility. And then you, of course, wouldn't want to, just say, I'm not investing because there's certain market conditions as such. But my personal experience has been investing in the proper bear market has, lets the founder be a little bit more focused on the product side and the user side and not so much worried. But as you're moving towards TG at later stage, you do need to worry about the market conditions, liquidity in the market, and you need to, think through those strategies, definitely.
Yeah, for us, I think we are very consistent, so we don't get affected on our investment strategy as per markets. I think that's very important in crypto, especially considering how reflexive and how volatile we are. If you just spoke to the same investors who are here and everyone you spoke, this crowd, the same crowd 1 month back would be full bullish, and now we are bearish, right? So I think the only thing that works, if you have to disconnect yourself with price movements. I don't look at prices every day. I don't care. I'm thinking of the next 3 or 4 years, and I'm very consistent in keeping my investments as such, right? So we are venture fund, we don't do liquidity, and in case it's a bear market, I'm not going to do liquid markets, right? I don't change my strategy because of that, and I think it's very important to be consistent over a long term and have a long-term thesis in this because we are very short-term oriented as a market, right? And I agree with Raghav to add on that bear markets are the best time to invest in terms of return profile, valuations, and also a lot of hustlers, like hustlers just run away from bear markets, right? So only serious team stays, you get really good teams coming through, you get more time to do your due diligence and everything, so it's an investor's market in a bear market as such. The good thing about this market has been that even though the market's been hot, we have managed to find deals in the right valuation cap and not being crazy. So I think this was a much more measured kind of market situation. We still had, I would say, absurd deals as such, but you still find good deals with good teams coming around with very kind of rational expectations on valuations.
Yeah, I would just like to add on what Shaishav just said, because I completely agree with this point that it's not like only good deals will come during the bear market. It's just that during bull run, you have to kind of put in a lot of effort to, figure out who the good builders and hustlers are and who are just trying to take advantage of the market. So you kind of still continue deploying. It's just that investing or deploying early stage capital in bear market becomes easier. As you said, it becomes an investor market where you have time to do due diligence, where a lot of us, good folks are there, and people who do not have the conviction, kind of go away. So yeah, but we've been deploying since 2020 now, and yeah, you have to be consistent throughout.
Yeah, I think the key role, one of the key roles, I super agree. One of the key role of VC is to support those very ambitious founders who are willing to take the high risk in building something, to find the new opportunities in the market. But I want to add one more point here. For me, I personally, the way I understand that why some of the funds have some different strategy to put more their liquidity in the secondary market is that I think compared to Web2 traditional market, we also have some also have the question marks about how do you guys like evaluate the valuation model in those primary market deals, only based on the narrative or anything else. So at the end of the day, it's pretty difficult for us to fully answer some of the questions for those guys. I think the beauty of the crypto market is that the liquidity is super good, and for the investor they have, especially from prime market investor, the positive side is that they can have more friendly exit path, but the negative side is that we also saw a lot of projects they didn't have any product market fit. Even before Series B, they are urgent to issue token and launch the token. And at the end of the day, the valuation model is quite messy, I would say. That's why some of the VC in prime markets, they have a lower confidence to take those high valuation opportunities, and then they split some of the package on the liquidity market. I think that's the way I understand the rationale behind those investors.
Okay, so you mentioned that the trades you were looking into funders were like extremely dedicated and an ability to take risks. As early stage investors, our goal is mainly to back funders. I mean, because the product is not yet live and the adoption traction is not yet also here. So what are, super concisely, the traits you're looking for into the funders you're backing?
Yes, if the traits that we are typically looking into, one of the key one, I would say, is the motivation of the founder. We try and understand what's the story behind, like what motivated that individual to, how did he identify the problem? Why is he motivated? And is he the right person who can solve that problem? I think along with smart, what's maybe not appreciated enough is the resilience and the grind that founder have to put in, regardless of how wonderful your product is. This is a permissionless market. You'll see, others come up with similar or better products. So we are typically looking for motivation and conviction, but at the same time, they should also be flexible enough to react to, changing market conditions, changing dynamics. So I would say those are the key things that we would want to work with. The other thing that we typically want is, especially during the super early stages, we look for founders who are willing to work with others, who are willing to, who are slightly more coachable and not, just going down this straight path. So yeah, those are some of the qualities that we tend to heavily focus on, especially during the early stages.
Okay. I think we all agree on that, probably. No?
Yeah, I mean, pretty much agree, but to be honest, it's like dating, right? It's a package you're buying into, it's not one trade. And there can be founders with completely opposite traits to what you were thinking of, but he has something that impressed you. And so it's a package, I would say, as a combination, right, that you invest in.
Definitely, I remember this sentence from Peter Thiel, like we're looking for founders that at the same time are super resilient and they focus on their goal, but they have this flexibility and internal mindset to listen to feedbacks and to adapt. And also you have to see both kind of extreme in their personality. Maybe just would like to have a last point, like the future of the industry. So which vertical or narratives, maybe explain what is a narrative for you, if it's important or no when you're investing, but which trends and technology we spoke during Nebula we spoke about alt VMs, about restaking, about like new DeFis. So what are the verticals you're really interested by? And as investors, where do you see the value creation and how will you capture as investor? What's like the business model, tokenomics you're mainly interested by in those specific verticals?
Sure. Right now, I'm really excited about what's happening on JK. I think the thesis is that the demand for proofs and JK applications are just going to increase. Right now, majority of the demand on the proof side and the JK demand side is mostly from networks and chains. I think eventually we are going to see applications overtake that demand and a lot more applications using JK, both crypto, Web3 and Web2. The other thing, I mean, I've never been this excited about Bitcoin ecosystem. I'm a Bitcoin maximalist philosophically. So yeah, I think what's happening on Bitcoin ecosystem is amazing. I think ordinals, so this is how I like to put, like ordinals validated our thesis that Bitcoin people like to do Ethereum stuff on Bitcoin. So now it's about let's get serious stuff being built on Bitcoin. We've seen a lot of L2s come around on Bitcoin this season. A lot of them are glorified multisig, to be honest. I think we are seeing the second batch, which are going to be teams which are going to natively bridge from Bitcoin. Pretty excited about that side. I think there's a lot happening that side. There's the opcode debate, if you're following, but pretty excited about Bitcoin as such right now as an ecosystem. It's never been this exciting, to be honest, right? The other vertical, I'm really excited, and I wish more founders go into it, is consumer applications. I think that's how we mainstream crypto and consumer applications. Just to say, I'm looking for founders who want to build consumer applications, not crypto products as such, right? So generally, if you see the social media products and crypto, their pitches have been that we are building a Web3 Twitter. Our experience is going to be worse than Twitter. We are going to be slower than Twitter. We are going to be costlier than Twitter, but we have tokens, right? And I'm not looking for that, right? Like, I think there are consumer applications to build. If you're building a Twitter, your experience has to be as good as Twitter or better. And you have to use Web3 as a feature to improve that experience, right? So Web3 improves a lot of experience on consumer application side, and I'm pretty excited about that. But it's still very, very kind of, like, there are not too many teams coming across for us for funding and that we like, but it's picking up.
Like, maybe also we may mostly like developing infra or investing in infra. Do you have one sentence to take about the launch of like the Ton ecosystem or the Base ecosystem, which basically they already have a significant user base and they are now will have a kind of seamless like blockchain experience? If you have just one sentence. What do you think about like blockchains such as Tone, like ecosystem launching, which already have a significant user base compared to us developing infrastructure?
I think one thing when we talk a lot about Ton ecosystem, of course, they have millions of users. One thing which is, I think, quite a lot of times is missed is you can still build consumer-facing applications on Telegram which are not running on the Ton blockchain. You can have an application. I was just playing this game, a few minutes back, which is a game, and it opens up with my Telegram client, but behind the scenes it's running on ZK Sync, right? So I think Ton is, of course, a very strong thing because they have the experience of building a consumer application which works. And now they would, of course, want to leverage that distribution channel for their Web3 infrastructure as well. But that is not stopping from any other infrastructure player in the market to use that as a distribution channel. As Shaishav was just saying, you don't necessarily need to build the next Twitter or something just because it's decentralized. You need to build something that adds value. And I also feel like the UX problem to a certain degree is overhyped in this case. So for example, I was just reading this tweet and it resonated so well. Learning how to drive is not easy, right? So you could say the UX of driving is not that great, but people still drive because it gives them a very, very strong value, right? That I can get from point A to point B very easily. So if you can build an application that actually, gives value to users, they will be more than happy to, download the MetaMask or whatever. And those are problems which can be solved with time. But I don't look at it that way that we can just, improve the UX and then, we'll have mass adoption. Whether it's Ton ecosystem, whether it's through Telegram or whatever it is, we need to think what is the value that we can give to the users. And if they find value, they will definitely use it.
Thank you very much, Raghav. This concludes our panel on early stage investing in a bull market. Thank you very much, Raghav, Shaishav, Ray, for being here with us today at Nebula Summit. Thanks.
Got here just in time.